If you want to generate a good corpus for your kids' education, marriage, or retirement, then this video is definitely for you. Welcome to CoachFin. I am Nilesh Bodhi, and today we are going to see how we can create a wealth of 31.70 crores with the help of Nippon India Smallcap Fund. If we take the right decision at the right time regarding the education or marriage of our children, that is, if we take a final decision, then we can be completely careless with the big issues. Yes, if you want to invest money for the future of your children, where after investing very little money, you need a big fund out of it, then you can think of a small amount under a scheme of Nippon India. You can invest rupees 500, 1000, 2000, and the more you invest, the more is better. Okay, the more you do, the more you will get the returns. But the bigger advantage of this scheme is that even if you start with a small amount, okay, but if you are in time and start as soon as possible, then you are going to get a lot of spread in this scheme. Now let's talk about what this plan is and how we can invest in it. How there are many different schemes in Nippon India. One of the scheme is Nippon India Smallcap Fund. Since inception, this fund has given a return of 24%. The best part is that you can start your investment in Nippon India Smallcap Fund just by rupees 100 per month via SIP mode. So let's see. Let us see the fund overview of Nippon India Small Cap Fund. Okay, so this fund was started on 16th of September 2010. This is an equity small cap fund. The NAV of this fund is 85.57. The AUM is 18,675.43 crores. There is no lock-in period in this fund. The exit load is, if you exit within 30 days, you will have to give 1% exit load. The expense ratio is 1.03%. Riskometer, as per riskometer, this is a very high risk fund. Okay, the minimum SIP which you can do is just 100 rupees a month, with which you can start in this fund. The minimum lump sum is 5,000 only. This fund has given a return of 11.06% in 1 year, 26.58% in 3 years, 17.32% in 5 years, and since inception it has been giving 24.11% returns. Okay. It is very important to know the allocation and the downside protection of any fund where we are trying to make investments. Okay, so let us see the allocation first. If we see in this fund, the number of stocks are 151. The market cap allocation, if we see, then this fund is investing 12.59% in large cap, 36.24% in mid cap, and 48.21% in small cap. If we see the allocation by sector, then this fund is investing 14.23% in capital goods, 11.86% in chemicals, 11.76% in financial sector, and 9.26% in consumer staple. If we see the top stock holdings, then this fund is investing 2.77% in TI Financial Holdings, 2.51% in Grameen Financial, 2.50% in NIT Limited, and 2.09% in KPIT Limited. Now let us see the downside protection. So as we can see, where the category average is giving 4.14%, this fund is giving 4.90% in 1 week's time. For 1 month period, where the category average is minus 0.80, this fund is giving 0.50%. And in 3 months period, if we see, then where the category average is giving minus 8.25, this fund is giving minus 6.35. And in 6 month period, where the category average is giving minus 11.11, this fund is given minus 9.5. And in the YTD, that is year to date period, where this fund is giving minus 12, where this fund is giving minus 10.30%, the category average is giving minus 12.02%. So as we can see that when the category average is falling much, this fund is also falling, but it is not falling as compared with the category average or with the market. The market definitely falls, but then this fund is falling less as compared to the market. So if we see the downside protection, it is good fairly because of the reason that this fund is being a small cap fund, they are also investing both in large cap and mid cap, so that gives stability to the portfolio. Now if we see the downside protection, there are two important parameters in it. The first is control losses during the market corrections. So for this first point, this fund is very good because it achieves the 4-point rating out of 5. Whereas with delivered returns, it is achieving only 3 out of 5. So if you consider this fund, these funds, the allocation they are making good, as we can see, both in large cap and mid cap, and in small cap, obviously small cap fund. So majority allocation is in the small cap fund. But when it comes to the downside protection, this fund is giving very good downside protection. Now that we have seen the allocation and the downside protection, it's time to see the fund performance parameters. Okay, so the first parameter is standard deviation. it gives an idea about how volatile fund returns has been in the past 3 years. Higher the standard deviation, higher is the volatility of the fund. So as we can see, this fund is highly volatile compared with the category average. Now the second parameter is beta. Beta gives an idea about how volatile the fund performance has been compared to similar funds in the market. Lower beta implies that the fund gives more predictable performance compared to similar funds in the market. A beta of greater than 1 indicates a stock price is more volatile than the overall market. A beta of less than 1 indicates that the stock price is less volatile compared to the overall market. And a beta of 1 indicates that the stock moves identical to the overall market. So as we can see, this fund, though it is higher than the category average, but it is still low when it compared with the parameter of 1. So this is this is a good factor. Okay, yes, when compared to the category average, it is not, but when we compared with the standards, then it is a good parameter. Okay, then we will see the third parameter, which is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns for this fund. Higher the value means the fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. Okay. The fourth parameter is alpha. Alpha indicates how the fund has generated additional returns compared to the benchmark. Sharpe ratio takes the risk to generate the returns, but on top of that also alpha takes much more much more risk to give us the additional returns compared with the benchmark. I hope you are clear with these 4 parameters. Remember, higher the beta, lower is the alpha, and vice versa. Standard deviation beta must be as low as possible, whereas Sharpe ratio and alpha must be as high as possible. Now the last parameter is turnover ratio. The portfolio turnover ratio is the rate of which assets in a fund are bought and sold by the portfolio manager. In other words, the portfolio turnover ratio refers to the percentage change of the assets in a fund over 1 year period. So as we can see, the turnover ratio is good over here when compared with the category average. Let us now see the benchmark comparison. When we see the benchmark comparison, we can very clearly see that Nippon India Smallcap Fund has beaten the benchmark from 2012. So from 2012 till 2022, we have seen that this fund has always outperformed. Okay, when compared with the benchmark. A fund which gives good returns and always beats the benchmark is always a good fund for long-term investment. Remember that. That's what we have learned from the history and the past data and the evaluation process. I hope you are learning with me from this channel and understanding each and every parameter clearly, so you can go and do the fund research on your own and invest in the funds which you feel are good for investment. Before proceeding further, let me tell you that by using the link of AssetPlus given in the description, you can open your lifetime free account for investing in mutual funds, fixed deposit and NPS. So please go ahead and open your lifetime free account on AssetPlus. Now let us consider that we are doing an SIP of 5,000 in Nippon India Smallcap Fund. The expected returns is 24%. We will take this 24% which is currently generated by the fund for calculation purpose, okay, for the next 30 years. So for 5 years, the invested amount is going to be 3 lakhs. Estimated returns are going to be 2,81,663 and the total is going to be 5,81,663. For 10 years, invested amount is going to be 6 lakhs. Estimated returns are going to be 18,90,117 and the total is going to be 24,90,117. For 15 years, invested amount is going to be 9 lakh. Estimated returns is going to be 78,51,812 and the total is going to be 87,51,812. For 20 years, the invested amount is going to be 12 lakh. Estimated returns is going to be 2 crore 80 lakh 96,627 and the total is going to be 2 crores 92 lakh 96,627. For 25 years, invested amount is going to be 15 lakhs. Estimated returns is going to be 9 crore 52 lakh 4,800 and the total is going to be 9 crore 67 lakh 4,800. And for 30 years, invested amount is going to be 18 lakhs. Estimated returns is going to be 31 crore 60 lakhs 70,088 and the total is going to be 31.78 crores. So this is how, if we invest 5,000 SIP per month in Nippon India Small Cap Fund, and if this fund gives a continuous return of 24% for the next 30 years, then we will be able to generate a corpus of 31.78 crores in 30 years. Since the market is volatile and we can't expect a continuous return from any fund, let us see that if this fund is giving 20% in the long run, then what is going to happen? So our investment amount of 5,000 is going to be the same. The expected returns is 20%. So for 15 years, the invested amount is going to be 9 lakh. Estimated return is going to be 47 lakh 71,475 and the total will be 56 lakh 71,475. For 20 years, the invested amount is going to be 12 lakh. Estimated returns is going to be 1 crore 46 lakh 7,397, and the total is going to be 1 crore 58 lakh 7,397. For 25 years, the invested amount is going to be 15 lakhs. Estimated returns is going to be 4 crore 16 lakh 30,541, and the total is going to be 4 crore 31 lakh 30,541. So if we invest 5,000 SIP and this fund gives a return of 20%, then we would make a corpus of 4 crores and 31 lakhs in 25 years. Now let's say this fund is giving only 16% returns and we are still investing our 5,000 SIP. Then what is going to happen? For 15 years, our invested amount is going to be 9 lakhs. The estimated returns is going to be 28 lakh 40,900, and the total is going to be 37 lakh 42,900. For 20 years, the invested amount is going to be 12 lakh. Estimated returns is going to be 75 lakh 47,304, and the total is going to be 87 lakh 47,304. For 25 years, the invested amount is going to be 15 lakhs. Estimated returns is going to be 1 crore 83 lakh 26,000, and the total is going to be 1 crore 98 lakh 20,089. So as we can see, with decreasing returns as well, we are able to make good returns. So these returns, for example, the 15-year returns of 56 lakh 71,000 with 20% return, or the returns of 37.42 lakh with returns of 16%, this can be used for your children's education. Okay, and on the other side, if you are doing 2 SIPs, then you can plan your retirement corpus. For example, for 25 years, this fund is giving 4.31 crores with 20% return and 1.98 crores with 16% return. So this is going to be very good for you if you are having long-term goals. I hope you are very clear on how to invest and how this fund will be able to help in the long run based on your goals. Thanks for watching. Please note, mutual fund investment are subject to market risk. Past success does not guarantee any future performance. If you have any goals like buying a car, home, children's education, international holiday, retirement, then fill your data by clicking on the link given in the description, and I will do the free portfolio analysis for you. This is a Google Sheet link which you have to go and fill your data. So I'll come to know what your goals are. Please comment and let us know how did you like this video. Also, if you are new to our channel, then please subscribe and hit the bell button next to it. Don't forget to create your free lifetime account on AssetPlus for investment in mutual fund. That's all for now. See you in the next video. Till then, take care.